What is up, and welcome to a Wednesday edition of the Pop Culture Jungle, because we are no longer talking about Andor. Instead, we're going to be talking about the Walt Disney's shareholder call and surprise announcement this morning. Joining me, as usual, is Justin. Oh.
Typically, you wait for me to do it.
Typically, I do, but I know you're on the iPad instead, so I was trying to make it easier for you.
I appreciate that.
Yeah, so it was the announcements today. They started off the day weird. I don't know how the calls went. I did not look up any information on it yet. We just pulled everything up. But I guess we'll jump into the weirdness, where it starts with Disney announcing a new planned theme park and resort in Abu Dhabi. From what I'm seeing, this looks like it's going to be more of a licensing deal, like the agreement with the Oriental Land Company. But again, we won't know until we get further into it.
That's kind of what I was reading as well.
So Walt Disney Company and Mural, Abu Dhabi's leading creator of immersion destinations and experiences, announced an agreement to create a landmark Disney theme park resort in Abu Dhabi, United Arab Emirates. The waterfront resort will be located on Yas Island, a world-class destination for entertainment and leisure, connecting travelers from the Middle East and Africa, India, Asia, Europe, and beyond. This is the seventh Disney theme park resort. This seventh Disney theme park resort will combine Disney's iconic stories, characters, and attractions with Abu Dhabi's vibrant culture, stunning shorelines, and breathtaking architecture. Before we continue down that route, here is Yas Island. The big announcement of the day is, of course, Disney coming. It's a basic resort area. So you got Ferrari World, you got the Yas Water World, so water park. You have the Warner Brothers World and SeaWorld. So I mean, I guess the positive side of this is there's not going to be really competition.
I mean, what, Yas Island?
Mm-hmm.
Okay. Yes and no, because like there's a bunch of theme parks at Abu Dhabi.
Yeah, but part of my problem is it never seems like any of these parks are very successful.
Mm-hmm.
Like back in 2008, Universal announced Universal Studios Dubai Land, which was not on Yas Island. It was just in Dubai. Construction did begin in 2008, but was halted due to financial problems, and the project was never completed. As of 2016, the plans have been officially scrapped, and they have never talked about going back to Dubai since then.
Okay.
Which tells me that, because again, we can just open this over in the... what in the world? That is a horrible picture. Is it a better one? I just want to open the image. Oh my goodness. Open the image. Thank you. Like, this is as far as they got.
Yeah.
Like, there was groundwork being done, and they had a site office, but this was just abandoned. This is as far as really they got with Dubai Land. Which, I don't know if Universal... That was 2016 when they finally scrapped it, so they had 8 years to get their finances back in order, which they most likely did. If they gave up on the area, there probably is a reason.
Mm-hmm.
I think this is a totally dumb move, in my personal opinion.
I mean, it's pretty low risk from what we know. It's pretty low risk on the surface for Disney because they don't really lose anything realistically.
I mean, besides brand image.
Yeah.
If the park opens up and is horrible, it's not necessarily going to be a financial issue, because we'll go further into that article here in a second, because it does look like Merrill's building all of it, but it also is going to hurt brand recognition, which is a big thing. Plus, it's going to be like Shanghai, which is still a financial headache, where it's going to just pull the people from that area away from the other parks.
Yeah.
Like that's a lot of money that does come from those countries to the states parks or to one of their close ones being Euro Disney, and that's what helps keep Euro Disney going at this point.
Yes.
Or sorry, Disneyland Paris. I'm always stuck on the old name. Back to the article though. The new resort will be fully developed and built by Mural. Disney and its legendary Imagineers will lead creative design and operational oversight to provide a world-class experience. Mural, which has developed a number of family entertainment destinations on Yas Island, Abu Dhabi, in collaboration with American and European brands, will operate the resort. So again, this is coming down to Disney's just building it and letting letting Mural do what they want in Abu Dhabi. Which again, if they, not saying they will, again, I've never been to one of their parks, but if they start to shortcut things, it's not going to hurt Mural.
Yeah.
Disney.
Yeah.
Quote, "This is a thrilling moment for our company as we announce plans to build an exciting Disney theme park in Abu Dhabi, whose culture is rich with appreciation of the arts and creativity," said Robert Iger, Chief Executive Officer of the Walt Disney Company. "As our 7th theme park destination, it will rise from this land in spectacular fashion, blending contemporary architecture with cutting-edge technology to offer guests deeply immersive entertainment experiences in unique and modern ways. Disneyland Abu Dhabi will be authentically Disney and distinctly..." He likes to use this authentically Disney, distinctly whatever phrase in every speech he says, doesn't he? "And distinctly Emirati, an oasis of extraordinary Disney entertainment at the crossroads of the world that will bring to life our timeless characters and stories in many new ways and will become a source of joy and inspiration for people of this vast region to enjoy and for generations to come." I asked this question to your grandma, so I'll ask the question to you. Okay.
Yep.
What is it with Disney CEOs making bad decisions to build a new park right before they retire? Michael Eisner, we had, Disneyland, Euro Disney at the time, Disneyland Paris now, and then Hong Kong Disney. And now Bob Iger, we have, Shanghai Disney, which is a pretty park, but financially is not a very good park. And now Disney Abu Dhabi, or whatever the title is going to be. This is a trend I don't think we should continue, but apparently it's now happened twice. The UAE is located within a 4-hour flight of 1/3 of the world's population, making it a significant gateway for tourism. The UAE is home of the largest global airline hub in the world, with 120 million passengers traveling through Abu Dhabi and Dubai each year. Again, when it comes to wise, I get it. It's just, this is such a weird choice to me.
Yeah.
This is the video from Disney.
"There's really no secret about our approach. We keep moving forward,
with the hope that it will be a source of joy and inspiration to all the world."
In Disney's 102-year history, there have been many defining moments and countless achievements. Today, we celebrate another thrilling moment, the creation of a spectacular new Disney theme park resort coming to Abu Dhabi.
Isn't he looking really old at this point?
Yeah.
The years have not been kind to him.
Abu Dhabi is a place where heritage meets innovation, a place where we preserve our past while designing the future.
Bringing a Disney theme park resort to Yas Island, Abu Dhabi, marks a historic milestone in our journey as a global family destination.
The 7th Disney theme park resort destination represents a new frontier in theme park ambitions. Our resort in Abu Dhabi will be the most advanced and interactive destination in our entire portfolio. The location of our park is incredibly unique. It's anchored by a beautiful waterfront, which will allow us to tell our stories in completely new ways.
Disney C2.
Ultimately, this project
Pretty
will be a
much.
celebration of what's possible when creativity and progress come together.
What we are creating with Disney and Abu Dhabi is a whole new world of imagination and experience that will inspire generations across the region and the world.
This collaboration represents a powerful fusion of Disney's unmatched legacy in storytelling and Miral's commitment to bringing world-class entertainment to our guests.
Abu Dhabi's vision for the future is to create a legacy for generations to come.
Disneyland Abu Dhabi will be authentically Disney and distinctly Emirati.
Every time.
An
Always
oasis
have to have the
of
line.
extraordinary Disney entertainment at this crossroads of the world. It will bring to life our timeless characters and stories in many new ways, becoming a source of joy and inspiration for the people of this vast region to enjoy for generations to come.
I hate that design. If that is what the castle is supposed to be, I hate the design. I think it looks ugly. Okay. So theorizing for a second, okay?
Yep.
We can assume that this might be a hub style, hub style park, because that's usually what the first park built everywhere is.
Yeah.
So probably 5 to 6 lands to start with.
Yep.
Out of the 5 and 6 lands, how many of them are going to be original to this park, and how many of them do you think are going to just be copies from somewhere else?
Well, what did Shanghai launch with?
Shanghai launched with let me pull it up so I give the correct name. Official site. Please don't track my information. Where is your park map? I just want to see the map. Why is this so hard? Oh my goodness. Will you let me see it? It's opening them all like that big. Images. Size. Maybe not. Thank you, Google. I'm so appreciative of how you work sometimes. Okay, here we go. So Shanghai Disney opened with a total of 5 lands.
Okay.
You had Mickey Avenue, which is Main Street.
Yep.
The Gardens of Imagination, which is the plaza right outside the castle.
Okay.
Oh, sorry, 6. You have Tomorrowland, Fantasyland, Adventure Isle, and Treasure Cove.
Okay. I honestly do think we'll see fantasy and adventure because for some reason that's their favorite thing to do.
See, I'm kind of pushing back about fantasy and adventure.
Oh, sorry, I meant fantasy and Tomorrowland.
Okay, I'll let you go on, and then I'll jump back in.
Honestly, everything else, I have no clue, man.
I think the only thing, like from Shanghai for reference, that we're going to carry forward would be Mickey Avenue.
Yeah.
That is the entrance to the park, and that's the one thing they pretty much copied everywhere. Besides that, I think this entire park's just going to be copied and pasted of different lands from around the world. So I think we're going to see Arendelle. We might see a Tomorrowland of some sort, but probably based on the fact that I think they showed Tron in that video like 7 times.
Yeah.
Landing on Tron. This looks like Bob Iger era of the park. Like whatever they acquired.
Yeah, I was literally about to say, I think it's just gonna be like just like IP park. Because that's kind of what Abu Dhabi is for theme parks.
Yes. And don't get me wrong, Disneyland started as an IP park, but there were still original pieces to it, and they added originality to it. This park is not going to be that.
Yeah.
I would be surprised if this park has realistically original items. They're probably going to have a Pirates of the Caribbean, but it's probably just going to be a newer version of the Shanghai Disney Pirates of the Caribbean.
Yep.
I'm trying to just scroll through. The only other thing that we haven't seen in that video was upon completion, the new theme park resort will offer signature Disney entertainment, themed accommodations, unique dining and retail experiences, and storytelling in a way that celebrates both the heritage of Disney and the futuristic cultural essence of Abu Dhabi.
Okay.
What is your thought of this, like, castle shrine?
I mean, I think every single piece of concept art is fucking ugly. Or shoot, I said a bad word. Is ugly because it's all like watercolor paint for some reason and very blurry.
I think I figured out where this project came from.
Oh?
Okay. I think Disney saw that Universal had announced Great Britain, and they went and found whoever it was that could give them something fast, and they just threw a base whatever together to do it. I bet you this is a response to Universal UK.
When was UK announced?
Just legitimately 3 months ago? 4 months ago? 2 months ago?
Yeah, maybe.
Because again, why is it that we have, again, like you said, concept art that looks, there's no, this means nothing. Like, this might be Tron. This might not even be on property. This means
there's actual concept art?
Supposedly.
Sort of.
Maybe. There's no rhyme or reason to this. This is a mess. Supposedly, somebody saw, and I saw this on Twitter, so take that with a grain of salt. Supposedly, they're saying a 5-year timeline. That this park will be open in 2030, which again lines up with when Universal UK is supposed to open.
Yeah.
And so that makes that's where I started piecing that together. I'm wondering if that's what it is they're just quickly trying to catch up and, oh, hey, we can build in Abu Dhabi instead and probably be cheaper, especially again since it sounds like they're not paying for it.
Yeah.
Well, we do have the 37-minute earnings call that came after this announcement.
It was after the announcement? I thought it was part of the announcement.
The announcement
it was announced in the call.
The announcement came first. The announcement was pre earnings call. They probably talk about it in the earnings call. I will say this. I'll pull it up just so we have the current version. This conversation did help the stocks today. So
what are we at? Like 97 last night, right?
So yes, yesterday.
You're not sharing.
What?
You were sharing your screen. Oh wow.
We were at 92. Today it did come up. Now, again, we do not do financial advice. Do not take financial advice. We don't know what in the world we're talking about. Usually in the past, the last call was not a reference of it. Usually there is a jump in the price. And then after a couple of days, it will settle back down to wherever it's actually going to end at. So this is not normal. Frankly enough, if I had the cash, I probably would have bought several shares yesterday and sold them today.
Yeah.
But That's where that is saying. We'll see where it ends. I don't think it's going to stay that high, especially after everybody starts talking about it. This park will be a success for Middle East and Disney. We'll see. I'm skeptical on it. I don't think this is a good placement for it. But
so my point that I'd like to make is of all the Abu Dhabi like walkthrough videos of like theme parks on YouTube, they all look empty. Right? It's not just me?
correct.
Okay.
Every time I've seen anything of these parks, they are never super busy. And the biggest park that gets pulled to is Ferrari World, and that's just because of how fast that coaster is.
Yeah.
So unless they're going to build a super coaster, which Disney doesn't build, they'll have the Disney brand, which will pull families, but I don't think it's going to be enough. So far, everything we've seen from Yas Island in the past, there's not enough visitors actually to the island.
Yeah.
And so, for Disney, will it be a success? Yes. Will it hurt its brand image? Possibly. We won't know until later on. Because Disney's not paying it for this. Disney's just licensing it out, and they're being told what to do.
Yeah, and I think that's the most important thing here is that they're licensing it. They're not paying for it.
Correct. But see, my problem with that same plan
in
this case is a lot of the parks in Abu Dhabi seem very budgetary parks. They don't seem like they spend a lot of money on, the theming and quality that Disney normally does.
Yes, I agree.
And so I see them are coming into this and being cut back immediately.
I agree.
And so I see Imagineering going through and doing a big old design, going and saying, okay, this is going to cost, to do this attraction $15 million. Well, let's be honest. Okay, Splash Mountain cost $200 million to do the refurb. So $200 million, they're going to go, you know what? You get a quarter of that budget. Let's make that.
Yeah.
And that's where it's going to hurt. And that's going to then reflect badly on the Disney brand overall. And that's where Disney's going to take the hit.
We'll see.
Shanghai and Tokyo parks still ranking money for Disney, and they don't own these parks at all. This is the same deal with the Middle East. Tokyo Disney, you are correct. You are absolutely correct. The Oriental Land Company owns it. They also put a ton of money continuously in it. Shanghai is partly owned still by the Disney company. Shanghai is still not financially stable. It is still all over the place. It does not have great numbers. And we'll go into that because I believe the last earnings calls we talked about, Shanghai was still below its market. It is better than Hong Kong, but it still was losing money. But Tokyo Disney, you're absolutely correct. The Oriental Land Company, they don't care about money. They will throw money at it because they make their money like crazy. Any other input before we start our introduction?
I'm ready.
You're ready. I'm ready.
Am I gonna get mad about like another gambling site or something today?
Well, we're actually should be coming close to the launch of the gambling,
Oh,
supposedly.
did you start it?
Yeah. Can you not
Is
hear
it? I can't hear it now.
Please press star then
No.
2.
There we go.
Please note today's event is being recorded.
You haven't missed anything.
I would now like to turn the
Yeah, I
conference
figured.
over to Carlos Gomez, Executive Vice President, Treasurer, and Head of Investor Relations. Please go ahead, sir.
Good morning. It's my pleasure to welcome everyone to the Walt Disney Company's second quarter 2025 earnings call. Our press release.
Does this sound like it's live, or does it sound like a
and
recording again?
management's posted prepared remarks were issued earlier this morning and are available on our website at www.disney.com/investors. Today's call is being webcast, and a replay and transcript will be made available on our
I think this is a
website after the
recording.
call.
Yeah.
Before we begin, please take note of our cautionary statement regarding forward-looking statements on our investor relations website. Certain statements on this call, including those regarding our expectations, beliefs, plans, financial estimates and prospects, trends, outlook and guidance, and other statements that are not historical, may be forward-looking statements under the securities laws. We make these statements on the basis of our assumptions regarding the future at the time we make them, and do not undertake any obligation to provide updates. Forward-looking statements are subject to risks and uncertainties. Actual results may differ materially from the results expressed or implied in light of a variety of factors. These factors include, among others, economic or industry conditions, competition, execution risks, the market for advertising, our future financial performance, and legal and regulatory developments. Refer to our IR website, the press release issued today, and the risks and uncertainties described in our Form 10-K, Form 10-Q, and other filings with the SEC for more information about key risk factors. A reconciliation of certain non-GAAP measures referred to on this call to the most comparable GAAP measures can be found on our IR website. Joining me this morning are Bob Iger, Disney's Chief Executive Officer, and Hugh Johnston, Senior Executive Vice President and Chief Financial Officer. Following introductory remarks from Bob, we will be happy to take your questions. So with that, I will now turn the call over to Bob.
In the 102-year history of the Walt Disney...
Okay, we'll go back to that for a quick second. I wanted to see if I was correct with my notes. We're going to switch over here real fast. So this is one of the documents we're going to get deeper into later.
Okay.
This is the actual earnings.
Yeah.
This is experiences. So this is talking park to park.
Yes.
In this last quarter, internationally, the parks are down 23%. When we're talking money and we're talking, let's see, we'll just do this last period. So 1607. The international parks pick up 18% of the entire of what the domestic parks bring in. The international parks bring in 18% of what the domestic parks bring in this last 6 month quarter, or not 6 months, but this last quarter. So even they go on to explain down here in international parks and experiences, the decrease in operating income at our international parks and experiences was attributed to Shanghai Disney Resort and Hong Kong Disneyland Resort due to lower theme park attendance and increased costs. So it's not even Disneyland Paris that's dragging them down anymore. It's Hong Kong, which always drags them down, and Shanghai is part of that too. Tokyo Disney is never listed on these reports due to the fact they are not owned. But
So I would expect Abu Dhabi not to be on these reports as well.
Abu Dhabi should not be listed in these reports, except for I believe they. I'm trying to remember how to spell. Yeah, no, they should not be at all on these reports. Tokyo does not come up on this report because Tokyo would have their own. Tokyo is a private company, so Tokyo would have its own set of things happening internal.
Yes.
Sorry for the jump. I wanted to back check myself because I was starting to question if I was correct or not.
I mean, to be fair though, they're down because we're coming out of the winter season.
Yes, but even when we look at the previous year, they still are so small compared to the domestic parks. I don't understand why expanding it.
Okay.
Because we're talking, yes, those are both in Asia, but that's a very big populated area. When we talk Abu Dhabi, we're not talking too far from Shanghai or Hong Kong.
Yeah.
And I think the problem that Abu Dhabi will have more directly isn't even necessarily, again, the American parks. It's going to be Tokyo Disney.
Yeah.
Everybody understands the best theme park in the world up until recent. We'll have to wait till opening. Everybody can do full reviews. Tokyo Disney Sea is still the best themed park in the world.
Yeah.
Tokyo Disneyland is still one of the most attended parks in the world. that's going to hold its weight one way or another. It doesn't matter what else comes out elsewhere in the world. Those will keep their strength. Yeah?
Yeah.
Yeah. All right. I guess let's go back to Mr. Bobby.
Disney Company. There have been many defining moments and countless achievements. One such moment was the opening of Disneyland in 1955. Now, 70 years later, having entertained 4 billion guests across 6 Disney theme park destinations around the world, we are celebrating another great moment in our storied history. I am joining you from the United Arab Emirates, where we just announced an agreement to bring a Disney theme park to Abu Dhabi. Disneyland Abu Dhabi will be authentically Disney and distinctly Emirati.
Gotta add it in there.
It will serve as an oasis of extraordinary Disney entertainment for millions and millions of people in this crossroads of the world, connecting travelers from the Middle East and Africa, India, Asia, Europe, and beyond. This 7th Disney theme park resort will rise from the shores of this land in spectacular fashion, blending wonderful Disney stories and characters with the cultures and tastes of this country and this region. It will combine contemporary architecture and cutting-edge technology with the timeless magic of Disney to offer guests deeply immersive experiences in unique and modern ways. As part of our new strategic partnership with the Miral Group of Abu Dhabi, Disney will oversee design, license our IP, and provide operational expertise, while Miral will provide the capital, construction resources, and operational oversight.
Yeah, so they're legitimately Disney is not doing anything. They're
licensing it, yeah.
That means whatever Morrow Company decides to do is how the park will actually end up running or be built.
Our Imagineering team is already hard at work designing this large and very special destination that will become a source of joy and inspiration for generations to come.
Why don't you finish designing the projects that you've already announced and get those underway? Do we have a groundbreaking date for like Coco?
They claim that this will not affect those previously announced projects. They claim.
I doubt that.
To Abu Dhabi in the last 9 months, and each time I gain more appreciation and respect for the UAE government, the government of Abu Dhabi, for our partners at Miral, and for the people and the culture of Abu Dhabi. As we prepare to embark on this exciting new addition to our experiences portfolio, we already have more expansion projects underway domestically and around the world than at any time in our history. That includes investing more than $30 billion in our theme parks in Florida and California to enhance our offerings, create jobs, and support the U.S. economy.
So that price has changed. That used to be the $60 billion, unless he's cutting that $60 billion over, also now adding maintenance.
Focus must always be on building for tomorrow, as much as it is on managing for today.
Where has building for tomorrow been while Epic Universe was under construction? Well, I thought Epic Universe wasn't a threat. Why is it now in focus to go ahead and build for tomorrow? What happened during, the pandemic where we decided to stop construction and make a coaster take 5 years? I'm sorry, I'm a little on it. I'm a little like heated today.
So
that eye to the future and driving growth is central to the important work we've done advancing our 4 strategic priorities. And looking at our second quarter results, we're making excellent progress. We had a very strong Q2 with adjusted EPS up 20% from the prior year, rounding out a solid first half of fiscal 2025. Our Experiences segment delivered strong results this quarter, driven by the outstanding performance from our domestic businesses. Investments in this segment have delivered impressive returns on invested capital, with returns from our Experiences businesses at all-time highs. Experiences is obviously a critical business for Disney, and also an important growth platform. Despite questions around any macroeconomic uncertainty or the impact of competition, I'm encouraged by the strength and resilience of our business, as evidenced in these earnings and in the second half bookings at Walt Disney World.
So again, our statement is, don't worry about Epic Universe. We're fine.
Yep.
Our entertainment business, including movies, television series, news, and sports, continues to generate strong growth. Our feature films continue to enjoy success at the global box office.
What about Snow White?
That wasn't a feature.
Oh, well, okay, Captain America.
You know.
Thunderbolts from Marvel Studios opened this past week, and it is currently the #1 movie in the world and the best reviewed Marvel film in the last few years.
I'll give him best reviewed Marvel film, but being #1 in the world for this last weekend isn't that big of a deal when it's underperformed even to Captain America. Like, don't get me wrong, it is a well shot film, and I will give him it is the best rated film Marvel has. That's fine, but it again, even with the projections, not by much, it did not miss by much, but it still missed by 3 million. I'm sorry, if I had $3 million, I would, and I lost it, I'd feel kind of, scared, right?
I suppose.
Am I being too harsh on that little statement?
Yeah, I think you're nitpicking already. We're not even 10 minutes into the call. You keep pausing it.
Yeah, well, yeah.
We are also excited about our upcoming theatrical slate for the remainder of the calendar year, including the live-action Lilo and Stitch, Pixar's Elio, Marvel's The Fantastic...
Isn't it Elio?
Sorry.
Isn't the name Elio?
I don't fucking know, man.
Okay.
Fantastic Four, First Steps, Freakier Friday, Zootopia 2 from Walt
I
Disney
forgot that's
Animation
releasing.
Studios.
I don't think Freakier Friday is going to do anything.
No, I don't think so. It's a passion project made for Disney Plus, and it's just getting a theatrical release.
See, if it was going to just Disney Plus, I think it would do better than actually. I don't think it's going to make any money. I think it's going to be a
Avatar, Fire and Ash. We're also quite pleased with the performance of our general entertainment and news programming. Finally, sports viewership trends continue to be healthy. ESPN's Q2 primetime audience among the key 18 to 49 demographic was up 32%.
Okay, I do want to stop on that for a quick second.
Mm-hmm.
Let me ask you something, Justin, because we're specifically focused on the 18 to 32 group. Okay.
Yep.
What happens in March every year?
March Madness.
And March Madness focuses on what group?
What do you mean?
March Madness is normally focused more towards there is the professional side, but it's mostly focused on colleges.
Yes.
What age group is colleges?
18 to 25.
So miraculously, during March Madness, the biggest basketball watch time, miraculously ESPN went up this quarter. Who would have thunk? That's not even floating, because next quarter, when March Madness does not exist, it's going back down. Like, I don't get why we call March Madness a success. It's besides the fact that he needs to make it clear that their deal for basketball was a financial successful decision. That's the only reason that's in there. Because I did find an article, and I should have had it for today. So I knew this was coming. I knew this was going to be talked about. Do you remember the NBA experience that came to Disney, to downtown or Disney Springs, right there towards the start of the pandemic?
No.
So they replaced Disney Quest with the NBA experience, which legitimately was just a basketball arcade, really is what it was. But it was a ticketed event for everybody to go into.
What a joke.
It lasted 3 months. And then it was closed. Or maybe it was 8 months. It was something like that. Apparently, I found out this was a passion project that from Iger and that he pushed because he loves basketball. And so that's why he's pushing the fact of ESPN, because he likes basketball. That's really what it comes down to. So I knew that they were going to bring this up. I knew they were going to talk about the positive because, yes, the viewership did come up ESPN. But see, my question would be if I could sit down and have a chat with him after March Madness, how is the viewership going to be this next quarter? I don't think it's going to come back up. I think it's going to go down. I think it's going to be fine. But I'm sorry, CBS is where I normally go to watch sports. Sorry. I'm in a ranty mood tonight, which might make
I could tell.
Did you start?
Making it ESPN's most watched Q2 in primetime ever. Driven by ESPN's fantastic programming, including NFL and college football, the NCAA women's basketball tournament, and other exciting events, all of which is giving us optimism as we head into the upfront next week. Meanwhile, we are only a few months away from the launch of ESPN's exciting new direct-to-consumer product offering, and we look forward to sharing pricing and timing details very soon.
How is that still a few months away? Wasn't it a few months away last quarter?
When they announced it?
No, because it was announced before that. It's just that was the official announcement that there would be betting in it.
Overall, our expansive portfolio of high-quality content and programming is enabling us to continue to grow revenue and profitability in our streaming business. Streaming remains a key priority and a core growth platform for Disney. And as we move forward, our improvements in the product will continue to enhance the user experience, increase engagement, and reduce churn, thereby enabling us to grow the strategic business at an accelerated rate over time. This has been an excellent first half of the fiscal year with strong results powered by our disciplined and focused growth strategy. We remain confident about the direction of the company and optimistic about our outlook for the rest of the fiscal year. And with that, Hugh and I would be happy to take your questions.
Okay, before we get into the questions, pre-recorded questions and answers or real questions and answers?
They're probably going to be pre-recorded again.
I'm in the same boat.
Thanks, Bob. As we transition to Q&A, we ask that you please try to limit yourselves to one question in order to help us get through as many analysts as possible today.
Maybe not.
And with that, operator, we're ready for the first question.
Thank you, sir. And as a reminder, if you'd like to ask a question, please press star then one on your telephone keypad. Today's first question comes from Ben Swinburne with Morgan Stanley. Please go ahead.
Good morning or good evening, I guess, if you're overseas. Bob, I want to pick up on the streaming commentary you just were talking about. Over the last year plus, you guys have been bringing more Hulu content and sports content into Disney Plus. You're bringing, flagship in from a bundling perspective. I'm just wondering if you're seeing benefits to this broader content strategy within the Disney Plus app, whether you look, this is obviously a domestic comment, but you look at engagement, signups, et cetera, is the broadening out of Disney Plus into other areas of content helping the business from a, signups, churn, engagement point of view? And is there more ahead that you think can really drive the business? And I just wanted to ask you, because I don't think it was in any of the prepared commentary, the 3-year guidance, the double-digit earnings growth in 26 and 27. I assume all that is still in place off of the, the new 25 higher EPS base. Just wanted to make sure we had that correct. Thanks so
That's a good question.
Yep.
much.
We are not pre-recorded questions, George.
Okay. Before we get to the answer, is it A, going to be an answer, or B, going to side skirt as fast as you can around the question?
Because they're pre-recorded, they're not pre-recorded, it's going to be side skirting, and he's going to go, well, look at all the great content that we're adding because of this.
Yep, that's exactly where I'm at.
To answer your question specifically, the presence of a Hulu embedded in Disney, basically from a user experience perspective, and the addition of sports content is definitely having an impact, definitely having a positive impact. Not only is engagement up, but churn is down. and significantly. And as we look ahead, it's obviously our desire, and in fact, we're optimistic about being able to execute against it to turn the streaming business into a true growth business. And as we see it, there are three ways to do it. One is what we've just talked about, which is to continue to put Disney Plus and Hulu together as a user experience.
Side skirting.
We'll see more of that in the months ahead. In addition, we plan when we launch ESPN direct to consumer to be really smart about bundling that. And for those that bundle, the experience will be fully integrated. That will be another big step. So when you consider the Disney brands that are part of Disney Plus, the general entertainment that's part of Hulu and the volume, and then the live sports that will be part of the experience, in a way, there's nothing like it in the streaming world. It's unrivaled in terms of quality, in terms of volume, in terms of variety.
Go ahead, pause
we're
real
very
fast.
excited about it.
Doesn't live TV streaming exist?
Yep.
Yeah. Okay. Just clarifying.
So he side skirted in order to say, no, we have not seen any return on investment of doing this yet, is what that was.
Yeah.
Because we have not made extra sales. All it's saying is we anticipate once this new service eventually finishes, that's going to increase sales. Nothing's proven that yet. But no, the inclusion of all this stuff into Disney Plus has not increased the subscriptions and the sales of Disney Plus. It has not increased the numbers, increased the money. So good job side skirting. However, you just gave the answer anyways.
Two other pillars of growth for that business will be technology. We're also hard at work at improving basically the tech side of that business. We've taken a lot of steps already, including page sharing, which would.
The tech side doesn't increase your growth of the seller, though. Congrats, the service works better. It doesn't increase getting to the consumer. How do you make more sales?
Just kicking in with Hulu, that's also starting to work. A lot more in terms of personalization and customization, a lot on the ad tech side, and much more coming. I was just taken through a roadmap for the rest of the year. So we're not talking about many years. We're talking about near term where the technology improvements to the platforms will be significant. And of course, the third pillar of growth will be investment in content, particularly outside the United States, where we know that we need to invest more in local content. And we've already started that process. It takes time, and we don't really end up booking those costs until the shows air. But we're already starting to develop more aggressively in markets, in very, very targeted markets outside the United States.
These calls always remind me that Bob Iger legitimately only knows how to spend money to try to make the big company work and only knows how to buy things. That straightforward was just, we're going to just buy more content from elsewhere and see if that works. Pixar, the way to fix the problem with that was just buy the company. Marvel, the way to fix the problem with that was just buy the company. Bob, you don't got money. You can't keep buying everything. You cannot buy like Universal.
Right. And hey, Ben, this is you. Obviously, the guide that we announced for this year, which was 530, we've now taken to 575. The long-term guide remains intact. What we announced before, no change to that.
Thanks, Ben. Operator, next question, please.
Yes, sir. Our next question comes from Stephen Cahill with Wells Fargo. Please go ahead.
Yeah, first, just congratulations on Abu Dhabi. I was wondering if you could speak a little more on how you settled specifically on this location and this partner. I mean, Yas Island is really exciting already with the track and Ferrari World, and the Emirate has a lot in infrastructure, but there are a lot of choices in the region. So maybe you could just think about, what audience you're going after and how this particular location is best suited for those purposes. And then just a second question on parks. I think domestic park margins were up 110 basis points in the quarter. I think you said that cruise is margin accretive. I was just wondering if you could help us think through the margin improvement you saw at domestic. Was that mostly due to cruise mix? Were underlying domestic park margins up as well? Just thinking about that as we forecast this longer term. Thank you.
Again, good questions. The big companies are actually nervous and are actually trying to find out real answers. I think we're side skirting in the answer, though.
Oh, yeah.
Yeah, hi, this is Hugh. So in terms of the margins on the parks business, that's a combination of all of the businesses. So we have certainly seen margin accretion in the parks and experiences side as well, not just the impact of cruise.
Why not give the numbers? Because the numbers aren't as good as you're saying they are.
And then on the Abu Dhabi question, which is a good question, Stephen, because we did study the region very carefully, and we know that we had many opportunities. Obviously, building a theme park in a location is a huge endorsement of that location. It speaks volumes in terms of the ability of that location to sustain the Disney theme park. I should start really with an overview of the Middle East. It was very obvious to us that there were many people, basically hundreds of millions in the world, that were income qualified, where a trip to one of our 6 locations was pretty lengthy in nature and expensive. And so we felt the best way, obviously, to reach those people is to basically bring our product to them. Interestingly enough, as an aside, when we decided to build a cruise ship and put it in Singapore, which will not launch until the end of the year, we put it on sale just a few months ago, and the first quarter sold out in a matter of days.
That is a straight lie. I am 90% positive because I looked at those. That we're gonna fact check. I'm sorry, that's an easy one to fact check. He said the first quarter is sold out. Let's see, View Cruises. We don't have anything showing on this one. Let's see. Let's go departing, and we don't need to do departing. Starting December. Inside and Ocean View are gone. Veranda Concierge still available on the first voyage.
What ship are you looking at?
This is Singapore.
Okay, just making sure you have the right one.
December 22nd, so the week of Christmas. Only concierge are available. The first week of the going into January 1st, only verandas are available. This is not sold out. It is sold a lot. That's not even the first quarter. That's just December.
Mm-hmm.
Like there is still quite a few there. Let's just go forward 1 month. January's a little bit better sold, but again, still a lot of verandas, and that's what most of the ship is verandas. This is just straight. I won't call it a lie. This is a straight misunderstanding at the least. He hasn't looked at actually how the ships are selling, because none of these have been fully sold out cruises. And once we get to March, which would be still, it would be it'd be the end of first, going to the second quarter. We're down to even Ocean Views available.
Mm-hmm.
And this is the cheapest of the ships. So, Bobby, facts ain't facting over there.
As a for instance. So there's clearly a desire to engage of consumers to engage with Disney in a wide region that is actually distant enough from our other locations so that we don't really view this as in any way cannibalistic to the places we already operate. Then when you look at Abu Dhabi and the UAE, I mentioned these statistics earlier today. We talk about it being a crossroads of the world. 500 million income qualified people live within 4 hours. 120 million people will come through Dubai and Abu Dhabi this year alone. Abu Dhabi estimates that 39 million tourists will visit Abu Dhabi by 2030. That says a lot. Then as we started to really dig deeper into Abu Dhabi specifically and engage with our partners, obviously capital was not an issue. But in addition to that, they've demonstrated a number of...
Obviously, capital isn't an issue. We don't have to pay for it.
One, a real appreciation of quality and innovation, an appreciation of the arts and creativity, and a huge commitment to new technology. And we were impressed with all of that. We also looked at what they've already built between the Louvre that's already built, the Guggenheim, which is going up, and incredible other experiences, the architecture here as well. And everywhere we looked, we basically were convinced that this was a perfect place for us. And then in Morale, our partners, we immediately bonded with them in many respects, spoke the same language, and basically we both have a real appreciation of our history and our legacy, but moving forward and being forward thinking and innovating is also part of our, basically our DNA. And so it was very, very clear to us that of all of the places that we could choose from, there didn't seem to be any place that was better than this. And one of the reasons why it came together so quickly is because of how convinced we became, particularly after engaging with our partners, that this was the right choice.
Thanks, Steve.
I'm really curious
Operator,
how long
next
this
question,
conversation was to get there.
Thank you. And our next question today comes from Robert Fishman with MoffettNathanson. Please go ahead.
Thank you. Bob, the studio has clearly delivered many hits over the past year. I'm wondering if you could just share a little bit more about your excitement for the upcoming theatrical slate and how that will generate the additional long-term value for Disney and the multiplier effect that you talked about in your prepared comments. And on a related note, with the Thunderbolts opening, what is your confidence that Marvel can still be a significant driver to that Disney flywheel with its renewed focus on theatrical and putting out less scripted series on Disney+?
Thanks, Robert.
That's a mad question.
I have a lot of confidence in our upcoming slate. Let me just list some of the films that are coming out. We have Lilo and Stitch coming out.
The ones you talked about in the prepared
That's
statement.
the live-action version. Tracking is enormous.
Yeah,
I've seen
this is
the
an
movie a few
absolute nothing
times.
question, nothing
I can-
answer.
I can endorse it wholeheartedly. I have a lot of confidence there. Pixar, Elio in June. Then we have Fantastic Four.
No confidence
in,
there, apparently.
July. And then Tron, Zootopia, and Avatar to finish out the calendar.
Oh my God, I
year.
forgot Tron
That's
comes out
quite
this
a
year
lineup.
too.
And then next year, Avengers, Mandalorian, Toy Story, and Moana live action. So we have a slate in the next year and a half that not only have a lot of confidence in, but it's as strong as any slate that I've seen in a long time since, well, in 2019, I think was our best year. It's as strong as anything I've seen since then. So great confidence. And look, I've talked about Marvel a lot. We all know that in our zeal to flood our streaming platform with more content, that we turn to all of our creative engines, including Marvel, and have them produce a lot more. We've also learned over time that quantity does not necessarily beget quality. And frankly, we've all admitted to ourselves that we lost a little focus by making too much, and by bringing Marvel, by consolidating a bit and having Marvel focus much more on their films, we believe it will result in better quality. And I think the first and best example is Thunderbolts. So feel very good about that. Thank you.
Well,
thanks, Robert.
At least
Operator, next
they're
question, please.
admitting it.
Yeah. Sorry, Jamie texted. I was trying to double check what Jamie was. Yeah, but the same time, it seemed more like everybody already realized this, so I have to announce it, say that, not I actually take ownership of it. Because it was just like, yeah, well, we learned that, quantity doesn't always mean quality. Like, duh? Anybody could have told you that. Go talk to a child.
Absolutely. And our next question today comes from Jessica Reif Ehrlich with BofA Securities. Please go ahead.
Thank you. Maybe switching gears to advertising. Bob, you mentioned in your prepared remarks that you're optimistic regarding the upfront. So can you give us some comments on what you're seeing in the market? The move to programmatic, is it having an impact on your share of market, sports? And then I think the advertising was lower in Disney Plus, so maybe you could give us the color on what's going on. And then just a follow-up on Abu Dhabi. Since you're not putting capital in, is there any ownership, or is this simply a royalty?
That's a good question.
Ooh.
I'll start on the Abu Dhabi question, and I'll let you pick up your question on advertising. It is all their capital, and we will get a royalty. So there isn't ownership. We own our IP and license it to them is essentially the arrangement. We're responsible for design and development, and we will be involved significantly in oversight of their operations, basically to ensure that the Disney experience, meaning the Disney theme park experience, is up to the level that we offer in the other 6 locations that we operate. But
no, you just admitted that your job is to set it up, and then it's their job to take care of it. You do not get to make sure they keep the same level that the parks you own are kept there. They will open at your level, but if they're kept there, will be up to Marl Group and will be up to the people running, actually running on the day-to-day basis the park. Get that part correct.
by the way, we're not concerned about that at all. They've already demonstrated a commitment to quality in that regard. But this is essentially a license arrangement, but with considerable involvement of us. So although they will operate it, we will have employees embedded in the organization with them to help them operate a Disney theme park, basically the quality level that everybody's used to.
Yeah, hey Jessica, and it's you. Just to follow up on the advertising question. Right now, the advertising market is quite healthy for us. Live sports, as you know, is doing extremely well, and you see that in the ESPN numbers where advertising for the quarter was up over 20%. In addition to that, we continue as we go into the upfront season to see robust demand for our advertising. So I know there's lots of concern from a consumer perspective and what that might mean for advertisers. But right now, in particular, restaurants and healthcare have considerable demand for advertising. The one place that obviously continues to be a bit more challenged is on the DTC side. Not driven by demand, but driven by supply as we have new entrants into that marketplace. But that said, there's still strong demand there for Disney advertising as well. Overall, you may recall back at the beginning of the year, we indicated that our advertising growth would be up consistent with what we saw last year, which was 3%. We now expect it to be in excess of what we indicated back at the beginning of the year. So overall, the advertisers are certainly demanding what we can offer.
Thanks, Jessica. Operator, next question, please.
Absolutely. And our next question today comes from David Karnovsky with JP Morgan. Please go ahead.
Hi, thank you. Bob, just on ESPN flagship, as you move towards the launch, interested to understand better the approach from a programming standpoint, how you view the necessary critical mass of both sports rights and shoulder programming in a more tech-driven interface. How's that different from linear? And then just given the importance of some of the features you'll roll out, like betting and fantasy, how do you think about wanting to keep subscribers in that ecosystem versus giving them the option of consuming their flagship subscription through Disney Plus? Thanks.
First of all, to the last point, if you are a subscriber of linear ESPN, you will automatically get what I know we've been referring to as ESPN flagship. By the way, it will not be called that. And next week, Jimmy Pitaro plans to reveal not only the name, but he'll also talk about our pricing strategy. But the plan would be to basically be somewhat agnostic from a subscriber perspective, so that we.
But I do want to throw this in there real quick. I know I'm pausing a lot, but more so I want to pull attention to, as you put it, if you are a ESPN Plus subscriber, at least on launch, you will automatically become also a flagship subscriber. That's how they're going to be, that's how they're going to be able to show the shareholders how great their launch is and how many subscribers they got on day one.
I mean, that's pretty pro-consumer, so I'm for it.
Not unless they go, people don't know this and they get all of a sudden a free subscription and then get charged the second month. And also,
if it's an additional cost.
Well, that's pretty much what they just said, that there will be a different cost to it. That
Oh,
price will
okay.
come out later. But also, again, that's very shady, is the way I'm going to put it, to the shareholders, because that first month is going to look fantastic. It's like the Disney Plus first year, where they gave it out to everybody for free. It looked great of all the subscribers they had until they had to pay for it. I don't know. That I don't like that practice.
We can still do our best to preserve the multi-channel ecosystem, but at the same time, obviously, want to grow our DTC business. The difference is that the ESPN linear service will, if that's all the consumer chooses to watch, will not have the bells and whistles and those additional features that the DTC service will have. But again, we're giving the consumer the option of consuming both. From a critical mass perspective, we have obviously an unrivaled portfolio of licensed sports on ESPN and an unrivaled portfolio of studio programming and shoulder programming, the bulk of which will be on the linear service and, of course, on flagship, quote unquote, flagship. At some point, I've got to stop using that word. That said, what we've already been doing and what we'll continue to do is give consumers of Disney Plus and Hulu a taste of live sports on that service, so that we have an opportunity to upsell them on the Disney DTC service, which obviously is a priority of ours. And again, that service will have many more features than the linear service will have. So I know, and this will, when we launch, will be much simpler perhaps than I'm even describing. We're going to limit the number of SKUs. We're going to make it very, very clear what is what, meaning, what you get when you just watch linear, what you get when you sign up to Disney DTC. And I think the most important thing is that if you are a subscriber of Disney Plus and Hulu and ESPN DTC, I should have said ESPN, not Disney. If you're a subscriber of all three, you'll have a seamless experience there. They'll be completely, ultimately integrated or embedded into the service. And that I think is a real plus from a consumer experience perspective.
Thanks, David. Operator, next question, please.
Thank you. And our next question today comes from Michael Morris at Guggenheim. Please go ahead.
Thank you. Good morning. I wanted to ask a couple more questions about the experiences segment, and specifically about the outlook there. So you had a strong fiscal second quarter. You didn't change the full year growth guidance. So can you provide an update on what you were seeing in the demand environment in the U.S. in particular, and whether that changed from the end of the last quarter? Also, the growth rate, the implied growth rate in the back half of the year is for double-digit operating income growth. As you look into fiscal 26, is there a reason that double-digit growth isn't something that can continue? I know you've spoken to high single digits in the past in 26. So wondering if there's any upside there. And then just finally on international, you noted some softness in demand in China. And the question is that getting worse, and how much of a headwind may that be going forward? Thank you.
Okay, hey Michael, Hugh here. That's I think that was 3 questions, but I'll do my best to remember them all and answer them. In terms of
that's setting up so I can accidentally forget one and skip it.
The first piece, the outlook, the outlook is actually still quite strong for the experiences business. Bookings right now for Walt Disney World for the third quarter are up 4%, and that's with about what we would say is about 80% in, and then for the fourth quarter, bookings are up 7%. That's probably somewhere between 50 and 60% in at this point. So certainly looking very optimistic, and that was part of what factored into our change in the guidance going forward. In terms of your question on international, it's not getting any worse. And again, just to reiterate what Josh mentioned on the CNBC, attendance is actually still quite good. It's just per cap spending isn't quite as high.
That's China.
In China, correct. Because the Chinese consumer, as we know, is a bit challenged. So from that perspective, certainly feel good about the fact that we still have the engagement. Consumers are tightening their belts a little bit in that particular market, and that's what you're seeing flow through there. In terms of expectations for 26 and for first 25, the only thing I would say is we guided to 6 to 8. Given the numbers that we're seeing, we're probably going to be at the higher end of that for the experiences business for this year. And then for 26 and beyond, I'm not going to comment on that at this point. We'll do guidance on 26 when we get to 26. So I'm not going to provide any further color on that until we get to that point, other than what I had mentioned earlier, which is the guidance in terms of growth rates remains intact.
Thanks, Mike. Operator, next
And
question,
throughout the
please.
third question.
Absolutely. Our next question today comes from Michael Ng with Goldman Sachs. Please go ahead.
Hi, good morning. Thank you very much for the question. Just two on experiences. First, just with Disney Treasure hitting the second full quarter, or excuse me, the second quarter of operations, I was wondering if you could talk about key learnings from the cruise launch so far, and anything there that helps to inform expectations or strategy around the upcoming launch of Disney Adventure and Disney Destiny. And just as a parks follow-up, I was just wondering if you could talk a little bit about the international visitation to domestic parks, and if you're seeing any changes there. Thank you very much.
I'll take the cruise ship. You take the rest. On the cruise ship side, as we've expanded, we've embedded in our ships even more Disney intellectual property and at a higher quality level. And the ratings for the Treasure are just sky high. People just love that ship, and for good reason. And obviously, the ships that are coming will take full advantage of everything that the Treasure has taken advantage of, and then some. And so we feel great about that business. It has been a great way for us to bring the Disney experience to more consumers around the world. As noted earlier on the call, the experience we've had at putting the ship that will sail out of Singapore on sale, as a for instance. And so we see that business becoming a growth driver for the segment, over the next 3 to 4 years as more ships are deployed.
Yeah, and Michael, in terms of the attendance, international attendance at the domestic parks, we've indicated in the past that number has not gotten back to pre-COVID levels, but it is still in the double digits. We've seen a bit of an impact, but it's literally like, in terms of the mix, 1 to 1.5%. And what I would expect going forward is something similar to that. The good news is we're clearly more than making up for it with domestic attendance. So attendance at the parks has been terrific.
Thanks, Michael. Operator, next question, please.
Thank you. And our next question today comes from Kannan Venkateshwar with Barclays. Please go ahead.
Thank you. Maybe a couple. So Bob, on the park side, with the Abu Dhabi parks announcement, and you also have a long-term plan in place for the segment as a whole. Are there other opportunities in other locations around the world? I mean, now you have a presence in Singapore, you now have a presence in Abu Dhabi. So is there more opportunity for you to expand that footprint further as you look out longer term? So some thoughts on that would be great. And then Hugh, on the streaming side, when we think about operating leverage going forward, is that largely a function of revenue growth, or is there also cost opportunity as you align these platforms? And as Bob mentioned, there might be fewer SKUs going forward. And so does that also provide some kind of a cost opportunity where we see margins inflect? Thanks.
Kannan, thanks for your question. We just announced Abu Dhabi, and now you're asking for more already. So thank you. With this as our 7th location, we feel that once it opens, it gives us the ability to be far more effective at reaching basically the world's population than we've been before. And while I'm not going to rule out the possibility of another location, there's nothing that's really being planned near term to actually build another park in what would be an 8th location. However, I want to remind you that when we talked about a year ago about turbocharging that business with investment in capital, because the return on invested capital has been so stellar, we are continuing on that trajectory. And to remind everyone, and it's tied to the kind of deal that we made in Abu Dhabi, we're planning to invest approximately $30 billion to expand Florida and California, which obviously is a vote of confidence in those locations. But in addition, those will be highly accretive from a job perspective as well. We're also investing to expand in every other location that we operate. So obviously a bullish belief in the business itself. With Abu Dhabi, as I said, and with the addition of the cruise ships, we're making ourselves very accessible to hundreds of millions of more people than we were, in the past. And so we're gonna focus on this right now and the other investments that we're making. And as I said, I'm not ruling out the possibility of another location, but it's not exactly something that's a priority right now for us.
Yeah. And hey, Kanan, I'll handle the streaming question. While your point is exactly right, with a business that is going to have the growth that we have expectations for in the streaming business, there will clearly be leverage that just comes out of the revenue growth itself. But in addition to that, we absolutely have opportunities to reduce costs. So the answer is both. We can certainly do it on the G&A side, and especially as we start to add more to the product, both in terms of the technology side of the product where we will be investing, and in terms of the content that's delivered, whether it's bringing ESPN on and the additional content that we've been bringing in through bundling. We certainly expect to get operating leverage out of marketing over time. I wouldn't say that initially, especially as we launch ESPN, but over time we would expect to get leverage out of the marketing line as well. So put those two together, yeah, I do expect some flow from top to bottom. We will use some of that to invest back into business, perhaps in some international content, but I would also expect some of those cost reductions to go straight to the bottom line as well to give us accelerated margin growth.
Thanks, Kanan. Operator, we have time for one last question.
Thank you. And our final question today will come from Peter Supino with Wolfe Research. Please go ahead.
Hi, good morning, and thank you. Question back on experiences. You mentioned $30 billion of expansion capital for Florida and California, and I wondered if we're defining expansion in terms of attendance, is that capital that will enable more people to visit the park? And more broadly, how do you think about your incremental return on capital on expansions in your experiences segment? Thanks.
The guest experience is obviously paramount to us. It's very, very critical. And with that in mind, we actually limit the number of people that we let in because we don't want to decrease the guest experience. So,
right.
Yeah, right? They don't go to occupancy. What are you talking about? They would not go ahead and fill the park as much as possible. They don't try to push as much extra buying things and decrease experience. What are you talking about? You want to go have a day at Disney and not spend extra money? Well, that's fine. You can go over there. You want to spend your money, though, you can have a really good time. Come on now. That's a total lie.
As we look to expand, not only do we look to take advantage of the property that we have and the intellectual property that we have, but we look to add capacity so that we can let more people in without in any way impacting negatively the guest experience. And that's true really every place that we operate. It's really important to us. And we're blessed with the fact that we have more available land, and we certainly have a lot of intellectual property to be mined. And we've made announcements that are pretty specific about what we're building, a Villains Land and a Cars Land in Florida, as a for instance, a Pandora in California, a Coco in California. I could go on and on.
Not really. You almost announced everything right there.
Capital, we actually record levels in terms of return on invested capital in the business. And actually, when I returned to Disney back in 2022 and talked to Josh D'Amaro, who runs the segment, about this, and he showed me what the returns on invested capital had been in the then recent past, but more like pre-COVID, it was extremely impressive. And as we determine how we allocate our capital as a company, obviously we want to allocate it in direction where the returns are stellar, and this is one way that we do that. So I think that says it all, really.
So I want to touch on that point, okay?
Mm-hmm.
Pre-COVID, as he put it, the capital per guest expenditure was very stellar, as he put it. So very, very good. what is a big thing that changed after COVID?
The economy? Is that what you're getting at?
The price of the getting into the park alone. They shot up the prices on both coasts. They made it more expensive. They shot up the cost of food on both coasts. Like, yes, expenditure per guest was much higher because people could afford to go and could afford to buy things. Like, look at your history, your right here, recent history of what worked. And if you do that, it will work again. But of course, Disney won't lower its price. Why would they? They're Disney.
Thanks, Peter, and thanks everyone for your questions today. We
Yeah,
want
that
to
was
thank you for joining us and wish everyone a good rest of
There's only 10 seconds left. It's the goodbyes. Have you been scrolling through any of the number stuff, or are you playing on your Xbox? It sounds like you're playing with your Xbox.
I'm just here, bro.
We'll kind of go through this pretty quickly. This is the numbers. Film and television, Mufasa, we're still talking about. Earned more than 700 million. Thunderbolts opened last week, currently number 1 in the area. We do not talk about Snow White. We do not talk about Cap. There's not really anything special. Well, we did mention Born Again.
Really?
I mean, strong viewership. I don't know about that. Second season of Andor also just became the highest rated Star Wars TV show with a score of 97 critic score on Rotten Tomatoes. Is it really a 97 still?
I mean, I'm hearing good things about it. I think we're the only ones that find it boring.
I mean, us and everybody who hasn't watched it. Remember, its viewership is still horrible. Okay, so the newest review critically for the show is the first week still.
Okay.
So, sure, the first week it was rated that high. The popcorn meter has fallen since then.
What's popcorn at?
Popcorn is at still an 81. Season 2, fantastic. Episodes 7, 8, and 9 were the best of all Star Wars TV series. I'm very excited for the last 3 episodes. So apparently this last week was supposed to be good.
Okay.
Let's go back far enough real quick. Oh, hey. Last week, averaged out about 1 star.
Oh, okay.
My teenage son, this is who loves Star Wars, said it best. They took the wars out of Star Wars. Yep, they made a drama and an uncompelling one at that. The first 6 episodes have been hard to get through. At times, each of the 3 of us were lured to sleep. The dancing at the wedding, what in the heck did that add to the story? Examples are plentiful. The first 6 episodes could have been cut to 60 minutes, and there still would have been very little sci-fi action. The other review that the same day from somebody else. I enjoyed season 1 very much. I didn't find any part of it boring, maybe besides the first episode, but even that, it was just doing the first episode things. It's definitely one of my favorite spin-off shows in the Star Wars, but man, season 2 is boring. I tried to stay engaged and just waiting for something to happen, but there was just unnecessary and filler type things. Like when Cassian is on the planet with all those rebels, he just ends up leaving with nothing behind it. Then it just skips like years and years, and I'm just like confused because it's so patchy and weird. So critically, it's coming down. This was another one. This is a 0.5 star. Beyond tedious, nearly unwatchable. A soap opera on multiple planets. 1 star. I love season 1. Season 2, they scrapped everything that made the first season so good. Why can't Star Wars writers make good sequels? Way too much politics. It's extremely hard to follow. It's downright boring. Someone mentioned it being a galactic soap opera, which is about right, but 90% of the time they're talking about nonsense. It's like every episode is a filler episode and none of it connects seamlessly. I literally have to force myself to sit through each episode and pay attention, and I still forget what's going on, let alone care. Yeah. So apparently
I think it's a little out of touch to say that there's too many politics in a Star Wars show about starting the rebellion.
The politics one, I will give you that, but the fact that so many people are just like, it's boring, and I don't.
Oh yeah,
care.
I'm not ignoring any of that.
Yeah.
I'm just saying
the politics one I will give you. I don't. The 97 critic score, that's very handpicked because again, it hasn't been. The critics didn't go back and update it. The critics didn't care enough to keep reviewing the show after the first week.
Yeah,
that's a problem. Kids Family Program, 25 Emmy Awards, Percy Jackson, yada yada yada. These popular titles complement our already robust library that includes like Bluey, Grey's Anatomy, Family Guy, Bob's Burgers. Only one of those shows your company actually made. Sorry, I gotta turn the air back on. Let's see. We continue to make progress building streaming into a core growth driver. As evidenced by our strong Q2 with entertainment direct-to-consumer operating income improving to $336 million. We also ended the quarter with more than 180 million Disney Plus and Hulu subscriptions, increased 2.5 million compared to Q1. They are still if we break up Disney Plus and Hulu, they are still the smallest when it comes to Disney Plus compared to the other streaming services. And that's I don't have that chart in front of me, but that's actually just a fact. Legitimately, when it comes to the Nielsen charts of streaming services, for whatever reason, Disney is a special cookie, and there's an asterisk next to their number, because they get to use for their number ESPN, Disney Plus, and Hulu all as one number to compare against Netflix and compare against like YouTube TV division. So YouTube only being watched through a television, not mobile devices, because YouTube mobile does not show up on the chart, probably because it would make the chart very unbalanced. Continue to bolster sports they're going to talk about. Let's just go down to financial. Okay, following table reports EPS to diluted EPS in certain times of the second quarter. So the pre-tax income and to loss, they are higher. Are you able to read that, or do you need that bigger?
I cannot read anything, dude.
Oop. Might help if I do. That better?
I guess, yeah.
So 20% change in income. On something that's actually interesting. Total segmented operating income. Oh, this isn't the chart I wanted. I want this chart. Okay. Second quarter for the 6-month earning of fiscal. Financial results for the quarter. Revenue increased 7% for quarter 2, so 23.6 billion from 22.1. Income before income taxes increased 2.4 billion to 3.1. from 0.7 per billion. Let's drop into the charts. Here we go. Summarize financial results. Revenue came up about 7%. And for the quarter, and 6% for the 6 month. So that is down. Income before income taxes. That I don't know why that's such a big difference. Any input of anything?
No.
Linear network revenue and operating income or as followed. All of these are down except for operating income domestically, which made it a 2% positive change for equity. Okay. Here's Disney Plus and Hulu. Domestic, which is US and Canada, Disney Plus grew 2%. Internationally, Disney Plus grew 1% for a total Disney Plus change of a growth of 1%. And based on these numbers, that's probably mostly due to the increase of cost. Hulu on S video only, so video on
Standard
demand
video. Oh yeah.
grew 3%. Live television with video on demand fell 4%. For a net positive still of 2%. Which is not good. That means that division is starting to shrink. Or at least the higher tier division of it is starting to shrink. Average monthly revenue per paid subscriber for quarter end. Domestically, 1% change. Internationally, that's weird. So international went up 5%, but Disney Plus International only went up 3%. So I don't know what this international number is supposed to be representing, because it's part of the Disney Plus side. The Disney Plus International Disney Plus was less than Disney Plus International. Does that make sense?
Sure.
Hulu standard video on demand in the last quarter went down 1%. Live TV and standard video on demand went up 1%. It was such minimal changes that domestic Disney Plus average monthly revenue per paid subscriber increased from $7.99 to $8.06 due to increases in pricing, partially offset by the lower advertising revenue. So that's where that a little bit of change money came from. International Disney Plus average monthly revenue per subscriber increased from $7.19 to $7.52, which is why there's a bigger change there. Due to the impact of subscriber mix shift and increases in pricing, particularly offset by an unfavorable foreign exchange impact. Hulu standard video only average monthly revenue per paid subscriber decreased from $12.52 to $12.36 due to lower advertising revenue. And then Hulu live TV standard video average monthly revenue per per paid subscriber increased from $99.22 to $99.94 due to increase in pricing, partially offset by the lower advertising revenue. Okay, so sports. ESPN revenue domestically did come up 7% in the last year for the quarter end. Internationally came up 11% for an overall change of 8%. Star India was negative 100% because it looks like they closed that service. But total change for the company was a 5% change. Operating income / loss. Domestically, ESPN was a loss this last period. A positive international overall loss. Equity and income of investees apparently jumped, which I don't know how equity would jump with a loss in sales. Well, they'd be acquiring. For total loss on the company side, let's see, decrease in domestic ESPN operating results in the certain quarter compared to prior year quarter reflected higher programming and production costs, primarily attributed to airing 3 additional college football playoff games, as well as 1 additional NFL game due to timing. Advertising revenue growth due to increases in rates and average viewership. The increase in advertising revenue. So your loss is because of additional advertising. A modest increase in affiliate revenue reflecting higher effective rates. Let's see. Experiences. We did talk about the parks. What is their reasoning? Operating results at our domestic parks and experiences increased compared to prior year quarter, primarily due to growth at our domestic parks and resorts, and to a lesser extent, Disney Vacation Club and Disney Cruise Line reflecting. Higher volume attributable to increase in passenger cruise days, theme park attendance, occupied room nights, and Vacation Club unit sales. Additional passenger cruise days reflected the launch of Disney Treasure in the first quarter of the current year. An increase in guest spending due to higher spending at our theme parks. Increased costs primarily attributed to the fleet expansion of Disney Cruise Line and inflation. Okay. I don't know. Anything else you want to add to all this? Any other thoughts, comments, concerns?
I got nothing.
Yeah, you're in the nicest way. You're kind of just here.
Yep.
Anywho, you made this part of the video. Be sure to like and subscribe. Let us know your thoughts on the Disney shareholder call. I think they embellished a little bit better than they needed to.
Nothing burger.
It's a nothing burger. They have nothing going on. They have nothing to say.
Other than Abu Dhabi. But, like, that's kind of a nothing burger in itself.
That's really a nothing burger in my opinion, just because of the fact that, again, they're not really paying for anything on that. They're not doing anything with that. That's just somebody else is building a theme park. If you made this part of the video, be sure to like, subscribe. Until next time, see you later.
Bye. Usually you have me do it, but